Hello, this is Brandon Christy from Christy Capital Management with an educational economic update for March 2019. In this month's video, I'll discuss some of the major headlines that influenced the markets in February. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. After a strong January performance, markets were up again in February. Despite tumbling in the last 3 trading days, the Dow Jones Industrial gained 3.7% for the month, the strongest performance of all 3 domestic indices. This performance comes against a backdrop of mixed economic and international signals. During the month, trade tensions with China continued to ease, as did concerns about the Federal Reserve's monetary policy. Congress and President Trump also avoided another partial government closure during February. The new bill will fund the government through the end of September. Economic data seems just as split between positive and negative updates. We learned that home sales fell 1.2% in January. This was the lowest level since 2015 and 8.5% below where it was this time last year. In addition, the latest data indicates that December's retail sales were lower than expected. The report detailed a 1.2% decline, the largest drop since 2009. The next reading may provide more insight into the true health of the retail sales. December's report could be part of a trend or simply a symptom of the market's historic market decline and ongoing government shutdown. We expect to learn which direction we're headed with the data as more details unfold. In positive news, we received the first reading of fourth quarter gross domestic product, and the results exceeded expectations. The consensus was that the economy had grown about 2.2%. However, initial data shows that it actually was up 2.6%. The report indicated that business investment was also higher than expected. Plus, consumer spending hit solid levels despite December's retail sales decline. As March continues, we will watch to see whether the markets go and in what direction economic data is heading. Will retail sales rebound and consumer sentiment pick up? How will home sales progress? We will track the key measurements that can affect portfolio performance and work to keep clients on a path toward their goals. Well, that's it for our educational economic update for this month. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Please remember that nothing we talk about here is a recommendation. Give us a call at 866-331-7749, and we would be happy to discuss your personal financial situation. Well, this is Brandon Christy with Christy Capital Management and your March 2019 Educational Economic Update.
While we believe this information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purpose or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. The modern design of the S&P 500 stock index was first launched in 1957. Performance prior to 1957 incorporates the performance of the predecessor index, the S&P 90.